Good afternoon, everybody. It's Tim here at 5 Star Ford in beautiful Warner Robins, Georgia. Wanted to give some information from an insider. I actually had what they call in the car business a green pea, which I don't like the word. Somebody fresh and starting out in this beautiful business is what I prefer to call them. So somebody new, just now starting out in the car business, asked me a question which made a lot of sense. And I thought I would give some insight. I consider myself a professional, but I'm not a pro at this. I don't know everything and probably don't know as much as I should right now. But again, I had somebody fresh in the business ask me a question, and I always try to go over this with customers as well. So what I wanted to go over today was a couple of things. One, why banks prefer newer cars over used cars. How much banks will loan depending on your credit score. Why going new, obviously, with negative equity on your vehicle. And last but not least is short-term financing. So basically the first thing I want to go over is short-term financing. I prefer my customers to do short-term financing. There's a lot of benefits to it. Okay, so say you go 72, 84, and you got 96 months now out, which is nuts. But you go 72 months, 84 months, 96 months, just to save your payment, just to save $150 a month is just, to me, is not a smart business decision. So basically, I'm going an extra year or two to save $150 a month just so my payment looks better. When you're going that longer term, obviously you're paying way more interest. Way more interest. The other thing is you don't get title in hand faster. You don't pay that car off faster. And the other thing is, so you don't get your title in hand faster. You pay a lot more interest, and you can't trade as fast. I mean, you go 84 months at $750 a month. I mean, you can't trade. You're not going to be able to trade for 6, 7, 8 years. Compared to if I just did that $900 payment for 60 months, you probably save $7,000 or $8,000. So what I want all my customers to do is really concentrate on doing that shorter term. You gotta fight a little bit more during the month. I mean, you gotta fight some extra during the month. I mean, you gotta make extra $150 payment each month, but in the end, you're gonna save so much money, so much more freedom. You can trade so much faster. It just makes so much sense. So to me, my customers really want y'all to go 60, 48, 36 months. The other thing, putting money down is important. A lot of people say, I got excellent credit, I never put money down. Well, I mean, you got a higher principal. Okay, so yes, you have excellent credit, so I can finance 30, 60, 70 grand. You could sign and drive, but your principal is so much higher. So putting money down is super important too. So the ideal situation in buying a car would be going 36 or 48 months, putting 5 to 10 grand down and have a lower payment. I mean, even if you've got to go a little bit longer to save up money before you get that car, put yourself in a good situation. Really put yourself in a good situation. So next, how banks loan money on these cars. I get a lot of customers that come in, they're reestablishing their credit, and they'll say, well, man, you got a 2007 Honda Accord out there with 180,000 miles on it. You're selling it for $5 grand. I could probably get a $100 payment on that, and everybody will be happy. Banks loan money, obviously, on credit and on the vehicle. So, for example, say you're rebuilding your credit and your credit score is in the 500s. The bank will loan you 80% of what they say that vehicle's worth. If you got decent credit, 90%. Your credit's good, 100%. Your credit's great, it could be 120, 130, 140, depending. The other thing you have to look at with the bank is the high risk. Okay? 550 credit score means you're rebuilding your credit. You've had some past problems paying bills. So the bank, they're a little iffy. They're a little nervous that you might not pay bills. That car I was talking about with 180,000 miles on it, let's say that car breaks down. You have absolutely no warranty for that car. So what are you going to do? You're going to let it go back. So the bank just lost all their money. That's a high risk. So banks do not loan money on older cars. Now, Let's say that same customer that has that 550 credit score. Say you're looking at a brand new Ford Focus. You got $5,000-$6,000 off the price. So you got rebates. So say the car sticker's for 20 grand and I'm selling it for $14,000. Say you're that same person, that car breaks down. Well, guess what? You have a full warranty on that car. So having a full warranty on that car means if it breaks down, you take it to the service department, they give you a rental, car's fixed, bank's happy, everybody's happy. The other thing with the bank, say it's that new car again. Say that car breaks down. Say the new car again, and say, for example, you don't make your payments on that car. For whatever reason, the car goes back. The bank has a new vehicle, low miles, with equity. So just because a car is low priced, older vehicle, you think you can get a low payment, the bank's not going to finance you. Now, granted, if you're an 800 credit score, yes, the bank will finance you on that vehicle, but we're talking about rebuilding credit people here. The other thing is, all the time I have people with negative equity want to look at used cars. Negative equity with used cars does not work unless you're putting down a lot of money or you got extremely good credit and you only have a little bit of negative equity. You got to look at it like this. With a brand new car, you have rebates and dealer discounts. So let's say, for example, I'm selling you a brand new F-150 XLT. Okay, it's stickers for $55,000. Depending on the dealership, man, crap, you might get, let's just use even numbers. Let's say you get $15,000 off. So the bank says the vehicle's worth $55,000, but the dealership's taking so much money off. Now you're looking for a loan at 40 grand. Okay. Now with your negative equity, we can put that on top of that car. Okay, because it's worth 55 and we're only selling it for 40. You came in and you have XYZ brand and you're upside down $10,000. Now you're trying to borrow $50,000. Now I'm leaving the taxes and fees out, but using even numbers. Now, even though you got $10,000 negative equity, we put that on top of that 40. Now you're trying to finance 50. The bank says it's worth 55. You can get the car. Now, say we're looking at the same type of truck, but it's used. Okay, the used truck, let's say it's worth 40 grand. But let me tell you something, without rebates and dealer discounts, if this truck is worth 40 grand, I don't care what dealership you are in the nation, you're selling it for 40 grand. Okay, so now it's worth 40 grand depending on your credit. The bank's going to loan you $42,000 depending on how good your credit is, and you got $10,000 worth of negative equity. So now you're trying to borrow $50,000. All right, bank says it's worth 40 grand. You're trying to borrow 50. It doesn't work. So that's the main reason why you want to get a new car. So two things. If you got negative equity, you really want to go to a new car. If you're rebuilding your credit, say your credit's a little shaky, you're starting out again, a new car is the way to go. I'm telling you, with $1,000 down on a new car, small car, Cruise, Fiesta, Focus, Sentra, I mean, it doesn't matter what brand you're selling, but those cars have rebates, a little bit of cash down, rebuilding your credit, that's the way to go. So I hope this helps a little bit. I had some people asking me that it should be able to help people in the car business. It should also be able to help customers as well. Short term, I'm telling y'all, if I could preach this from the mountaintops, go short term financing. Pay the extra $150 a month to go that short term. Or even possibly thinking about leasing, especially if you like to trade a lot. So I hope this helps. It's Tim at 5 Star Ford, Warner Robins, Georgia. I'm not a car salesman. I'm a car advocate. I help. I provide information. I'm here to give advice. You don't have to buy from me. I don't care if you're in California. You can call me at 478-444-8408. I hope this helps. Have a great day.